Hey, good morning. Let's go over today's trade plan. So yesterday marked a breakout above the recent balance area, and today we're going to be finding out whether that breakout is actually going to stick. Heading into the open, we have pre-market support at 2097 to 99, and holding above that zone would tell us that the breakout is very much intact and the buy side is in firm control. Below that, we have initial support at 92.5 to 94.5, and buyers can still maintain control as long as ES is holding above 92.5 to 94.5, and from there we can still actually return back up towards 2100 and 2104 to 2105. The 97 to 99 area can almost be viewed as a very short-term micro bull bear zone, where if the market's holding above it, we know it's holding above the recent balance, and if it breaks it, then it just tells us that there's a little bit of weakness in the market. Doesn't mean that the entire move has to reverse, but a break below 97 to 99 would signal at least a lack of strength on the smaller time frames. Buyers can still be active at 92.5 to 94.5, but then from there we would need to see the market back above 97 to 99 in order to get any decent upside move. From there we have pre-market resistance at 2104 to 05. That's the short-term resistance zone, and above it the main upside objective is 2109 to 2111. So in the event that we get an upside move and a continuation into 2109 to 2111, pretty good idea to take profit there. Doesn't mean the upside has to be capped at that zone. We can technically head higher into the 15.5 to 17.5 zone, which marks the all-time high as well at 2117. And by that point, the range would likely be exhausted, and it's unlikely that the market will go higher than 15.5 to 17.5. But 09 to 11 is the high probability target, and 15.5 to 17.5 is more of an extended objective, which may not get hit today, but eventually it can still be tested this week. So heading into the open, our bias is going to remain bullish above 97 to 99 and even above 92.5 to 94.5. If we break 92.5 to 94.5, that would mark a failed breakout attempt, and then we would just be back in the balance that we tried breaking out from. It doesn't mean that we have to completely liquidate. It can still be a balanced session, but the upside would then be limited. So in the event that we fail at 92.5 to 94.5, buyers can still be active at the zones below, but then we're going to be looking for simply reactions off the zones, not necessarily a full-on breakout. So that's really the context heading into the open. Again, we are going to keep the focus still more on long setups, and we are going to be cautious on the short side. The only red flag in the bullish context right now is the lack of participation from the Russell. So if ES is really going to go higher into 09 to 11, then ideally you want to see the Russell holding up as well and actually breaking out above 1208. So if the Russell can break out above 1208, then we can probably get a decent upside move. But so far we've seen a relative weakness in the Russell and a lack of participation, which doesn't mean that ES can't go a little bit higher or ES can't hold here, but it can certainly limit the upside potential in the S&P. Looking at Nasdaq, we can see that it pretty much tested the yearly high so far, and we've seen some selling off of that area. So it's already reached a pretty decent upside objective. And again, when you kind of put all this together, you can see that if NQ starts coming off the highs and Russell really can't continue and starts selling off, then that's going to put selling pressure on the S&P as well. And in that case, we will have to be cautious even on long setups. But despite that, we certainly don't want to take aggressive shorts. You don't want to take a short right at a key support zone, for example, because despite the weakness in the Russell, buyers can still be active in the S&P, right? It is its own market. So, we can use these other markets as a bit of a tell, a bit of a clue at times, but, it doesn't mean that it's going to trigger a trade in the S&P. It's really more just to get a deeper contextual understanding of what's happening in the equity index markets. It's not necessarily that, if Russell goes a little bit lower, that it means short the S&P. That is not the case. So Again, 97 to 99, key area short term, below that 92.5 to 94.5. As long as those zones are holding, and ideally 97 to 99 holds, then we can get a upside push into 09 to 11. So those are our main ideas heading into the open. Let's see if the buy side can maintain control today, and we'll take it from there.